Macro. Okay, where are we? This is the most hated rally I've ever seen, and I've seen some hated rallies. 2009 was another classic. It is my view that last year, when the NASDAQ, S&P, the bond market, commodities, everything collapsed, that was the pricing in of the recession by those. And I do enormous amounts of work. We probably have 1,500 charts, plus a macro model, plus a bunch of stuff with Global Macro Investor, where we look into this. We saw from our forward-looking indicators what was going to happen. And we also then have been expecting the lagged effects of the economy to come through. We also noted that markets were somewhat forward-looking and that they would start rallying once liquidity started coming in, which is part of the everything code. We'll go a little bit through the everything code. And so that has exactly been playing out. We were buyers of Ethereum back in June, thinking that the global liquidity cycle had bottomed, and ETH was the leader of the entire cycle. That bottomed in June, did not bottom again in October, while everything else bottomed in October. I remember putting out some tweets for people talking about it's usually the bear killer month. You usually get a bear market and it usually dies in October. And that's what happened as liquidity came into the market. So that got me very constructive and bullish, first on crypto, because that's my chosen asset allocation. We'll come on to that later, because I think it's the fastest horse in the race. The race is all about debasement, which is the everything code. It's not about liquidity that a lot of people talk about on Twitter. I'm less interested in that. I'm interested in the debasement of global currency by the world's central banks. Liquidity is a factor, obviously, within all of this, and that comes up and down with the business cycle. And we'll come on to the debasement cycle later. So by January, February, I've been buying everything from NASDAQ to Microsoft to Tesla to Coinbase to KR1 in the UK to a whole bunch of these semiconductors over time, just buying all of these things on my thesis that the exponential age in technology. So I bought crypto first, then technology. Crypto is by far the biggest bet. Technology was going to be the second fastest horse. Now, what's proven out so far this year, I can blow my own trumpet for a little bit for once, because I get so much abuse anyway, is, so have a look at Solana, which is one of my bets. It's up 170% this year. Bitcoin's up 81%. ETH's up 60%. Meanwhile, over in the exponential age in equity land, that's up 73% this year. And NASDAQ's up 45%. And we said that, the other horses to back weren't worth backing. S&P's up 18%, so the NASDAQ's done 2.5x what the S&P's done. So the thesis seems to be playing out. And I think that continues into 2026. So I still see a lot of people expecting the second bear leg lower. I don't think that's coming. Of course, we'll get corrections. We'll probably get a scare along the way too, where everybody thinks the world's going to end. But I don't see anything but an ongoing forward-looking liquidity cycle and business cycle. The business cycle to me is bottoming in the next month or two, and that will start moving higher. But that phase of the business cycle is the sweet, sweet magic. When the economy starts recovering, asset prices start booming, and inflation, which is lagging, continues lower. The Fed, I think, are purposely raising rates late into the cycle because they want inflation as low as possible so they can cut rates as low as possible. When it comes to the debt refi cycle, you've all heard me talk about this and if you don't, go and look at the stuff on the Everything Code on YouTube or on the platform where it's in much more detail. But the debt refi cycle comes towards the back end of this year, 2024, 2025. So I think we'll see monetary printing, a cutting of rates coming over that period of time. The monetary printing will be brought forward if the banking crisis comes back again. My view is there's a potential that later this month, we start to see some cracks appearing there again, and that narrative comes back. Maybe it doesn't. We'll wait and see. It's not my core thesis, but it's something that I'm observing that would bring back the money printer goes burr, or more cowbell, as I say, a bit faster.
After a spectacular first half of 2023, the price of Bitcoin appears to have stalled out, being stuck between $29,000 and $31,500. There could be reason to believe that in the near term, the price of Bitcoin will tend to trade sideways or to the downside. This thesis can be based on 3 factors, with 2 of them involving technical analysis and the third involving fundamentals. Charles Edwards, founder of Capriol Investments, recently released a market update in which he notes the significant resistance Bitcoin has failed to break through at the $31,000, $32,000 level. Bitcoin is trading into the most significant resistance on the chart, $32,000. Despite a swath of positive news stories over the last month for the crypto industry, from the BlackRock ETF announcement, the XRP legal victory, to presidential candidate Kennedy stating he would back the US dollar with Bitcoin today, nothing has helped Bitcoin sustain momentum above $31,000. The report goes on to state that if positive news of this magnitude doesn't translate into upward price momentum, this alone could be a bearish signal. As crypto market commentator Colin Talks Crypto has pointed out, the next major support levels for BTC/USD don't kick in until somewhere around the $27,500 level. Not only does this level act as support based on previous price action, but both the 200-week moving average MA and the 200-day MA have begun to converge just beneath it. Despite these near-term bearish developments, there's little reason to be concerned long-term. The next halving event is less than a year away, and positive news keeps flowing in. Perhaps most importantly of all, the hash rate has risen by 50% in the last 6 months alone. This suggests that the Bitcoin network is stronger than ever and continuing to grow at a lightning-fast pace.
The forward-looking indicators are suggesting all of this goes up from here onwards. My view is that we will see, as I said, rate cuts to come. The Fed are purposefully late because they need to get all inflation expectations crushed. The one-year break-evens are already, so that's the expectation of inflation 1 year in advance, already about 1.3%. So it's come right down. The inflation gauge of current inflation is about 2.1% this morning. I think we break through 2% in the coming month and on our way to zero. So I think forward-looking inflation is zero. PPI is zero. PPI across Europe is negative. PPI in China is negative. PPI leads CPI. CPI is going to head lower. And of all of you going, yeah, but what about wages and what about rents and core sticky? It's always lagged. It is every single time lagged. It's purposely lagged, just the definition of how these things work. So we are seeing already forward-looking indicators of rents coming down. The core CPI is mainly driven by that. That's what the services inflation is. Wages are already deflating, starting to come lower, and we will see ongoing deflation from that. Core CPI, wherever it settles down at, will be amenable to rates being back what they need to be, which is at or below trend rate of GDP growth. Again, part of the everything code, which I think trend rate of GDP growth in the United States is 1.75%. So it's kind of all to play for here. Early cycle, this is the spring, the macro spring. We call it the GMI spring, that quadrant where growth stocks take off, all the growthy stuff happens, inflation is falling, unemployment's falling, and growth is basing and starting to pick up. We will see that the forward-looking indicators, even the ISM, the simple stuff like the ISM new orders index, those kind of things, inventories and new orders are starting to pick up. It's all over the place. And look, the Fed know it. They're not stupid. They know that the cycle turned a long time ago. They know the forward-looking indicators, where they are. They know inflation lags. But as I said, really for them, it's to undershoot inflation. That's now my core view is they want to undershoot because it gives them the excuse to fire the bullets that they want to fire.
So what's your price prediction for Bitcoin at the end of 2023